Yo, we're having a technical discussion today about how to hedge in the crypto market. So we're gonna get into some technicals, all about crypto market trading, hedging. Hope you find it useful. By the way, everybody pray for Nalani. She sprained her ankle on a hike on Friday, and she's been pretty pathetic, hiding in the yard while I'm going out and doing my hiking tours. And while I'm doing my hiking tours, in between, I'm trading the crypto markets. And yeah, I'm going to share with you in this some high-level concepts of how to hedge, which means going long and short at the same time, what the benefits are, what that looks like, and how you have to change your behavior and strategy a little bit for it to make it work. Not just something that's backed by data, but something that makes sense conceptually. So if you guys don't know me, my name's Travis. I do a lot of different things, interesting things. I'm a man of wide interests and who wears many different hats. And one of those hats is trading. And I've been trading the crypto market since 2020, and I've tried all kinds of things. I've studied all kinds of things. And not just crypto, I've traded every market. I've traded stocks. Well, I guess I haven't traded options, but I've traded stocks. I've traded commodities, precious metals, agricultural commodities. I've traded Forex, I've traded bots, I've traded manually, I've traded indices, futures, I've traded swing trading, scalping, all kinds of different strategies. I like crypto, I like swing trading, and I like hedging. So what is hedging? Hedging is when you're long and short at the same time, either the same asset, which we're not going to talk about. Why would you want to do that? Well, different assets in the same asset class. And the benefit of hedging is that because these assets tend to be correlated, all of crypto tends to be correlated. A lot of the time crypto will trend at the same time up or trend down at the same time. If you have a long on one and a short on one, these are inversely correlated trades, right? So if one goes up, the other should go up. If one goes down, the other should go down. So by being long and short at the same time, it's possible, but it's unlikely that you will lose both trades. And it's likely that you will win at least one of the trades. So it can reduce your gains, but it really depends. Because, and we'll talk about how a system actually ends up in longs and shorts at the same time and how to look at that. But outside of the times when the market has a major move, a lot of the time assets do move relatively independently. This is true of stocks, and this is true of crypto. Sometimes one stock will be in its own bear market, pushing new lows, and another stock will be pushing highs at all-time highs, and it's possible for you to win both sides of a hedge sometimes. But in general, when you have inversely correlated trades, it allows you to take volatility out of your trading portfolio and performance, and allows you to run more size also. So for me personally, if I have a long and a short at the same time, I am comfortable running larger size than I would normally. Why? Because the long and the short is likely to balance itself out. Now, you can still lose, so you need to be careful. You cannot go all in, but yeah, so let's talk about some different concepts. We'll talk about how to actually get into hedge long shorts and how I think it's important to trade a little bit differently when you're hedging compared to just trading the market in one direction. So here's an example of how you get in longs and shorts at the same time. Say you have a trend following strategy that trades breakouts and breakdowns. So if a coin is at a 30-day high and closes the daily above it, you're saying, hey, it's in an uptrend, I'm going to go long, my stop is going to be X. But if it closes at a 30-day low, takes a new calendar low, it's in a downtrend, I'm going to sell here and I'm going to have my stop here. So at the same time, there are coins today, I can tell you, that are pushing all-time high. Well, actually, there aren't any in the top 200 today, but there are coins that are breaking out of 30-day highs. And there are coins that are breaking down 30-day lows at the same time. So you can imagine if you have a system that's trend following and you're trading long and short at the same time, you're going to end up in some longs at the same time that you're in some shorts. and you might get faked out. The breakout might reverse, the breakdown might reverse, but that is how you're long the strongest ones and you're short the weakest ones. Now, I will say for a system like this, in my experience of what I computer back tested, it's important and useful to wait for a close. A breakout's way more likely to work if you get the daily close or even the weekly close. If you don't close and it falls back under, it's much more likely to be a reversal. Same with the long. If you take the low, waiting to see what happens in the daily, waiting for that daily close can give you more confirmation that it's a breakdown. I personally don't trade breakdowns, but I do trade reversals. So here's another way to get into longs and shorts at the same time. Another technical trade of trading reversals is if price comes and takes a 30-day high and then closes underneath that high on the daily, you can call that a failed breakout, take it short, and put a stop loss above the high. Or at the same time, if price comes and takes an old 30-day low or 60-day low, calendar low, and closes above it, closes the daily above it, that could be a reversal long. It's a failed breakdown. So for me, I'm taking breakouts, failed breakout. I'm taking breakout longs, failed breakout shorts, and failed breakdown longs at the same time, and it causes me to be in at times it causes me to be in multiple positions at the same time. Now, there's times when the whole market's breaking out, and you probably won't even be in hedges anyways. You just want to run with the market, or the whole market's failing at the highs, and you just want to be in shorts. Nothing's working, right? You just want to be short everything. That's fine. But there are times when the market's chopping and you're getting mixed signals, and it's totally fine to do nothing across the market. But what you can also do is trade each thing individually and hedge. And I'll tell you that I often feel more comfortable in hedge trades because I know it's reducing the volatility in my portfolio. If I lose here, I'll probably win over here. Hopefully my win's bigger than my loss. And it's a way to, instead of have a huge portfolio gain, gradually grow. And I'll tell you also, I've studied this. When you're shorting altcoins of a life cycle, they top independent of the market. There's times where everything in the market dumps together, but this year, Celestia topped in January, February. We had a lot of coins that topped in March, including Bitcoin and ETH. We didn't have so many tops in April and May. A couple did though, and then we had a lot that topped in June. And then I'm gonna guess there's gonna be some alts that top in July, and some that top in August, and some that top in September, and some that top in October. Why? Because of the life cycle of an alt. If people rotate capital, pump it, insiders sell, it dumps. So at the same time that I'm trading this rotating alts and have these positions, I may be longing Bitcoin, longing ETH, longing the strong assets. If a top 10 coin is breaking out, I might be trading out to the long side and having these. And it allows me also to feel comfortable trading bigger where, okay, I can risk pretty big on the short and the long at the same time because, especially as I see it move in my favor. Now, some behavioral things. So if you're trading the market one way, if I'm trading the market one way, if it goes against me, I'm usually just going to cut and wait for a better entry. I don't have a high tolerance for pain when I'm trading long only or short only, okay? But when you're hedging, if you cut your hedge right away, it's just going to cause you to get chopped up, because if you have a long and you have a short, the short moves against you, you cut the short, then the long starts to move against you, you cut the long, right? So if you're hedging, I'm a fan of running wider stops and allowing those stops to be hit, allowing the position to run against you, because as one position runs against you, the other moves in your favor. And if you just cut your hedge, it takes away the purpose of the hedge, right? Really what you're doing is you're trading relative strength. So we'll talk about one more technical indicator you can use. But when you're trading the market one way, cut your loss quick. You can run a tight stop, or you have your wide stop, but you cut your loss quick. If you're trading hedges and you have longs and shorts, let them play out more. At least give them more room to play out. Okay, now last thought, or one of the last thoughts we're going to have here on the technical So another thing you look at is there's different indicators that show you relative strength. So I will use this. I have an indicator that I put on relative strength of whatever asset I'm trading, and it compares it to either Bitcoin or the total crypto market cap or the altcoin market cap. And I'm not interested in the high time frame here. I'm interested in the relatively recent time frame. Since I entered in the last day, I want to see relative weakness in the last day. Ideally, for a short, I want to see huge relative strength, failed breakout, and relative weakness coming in. Or for a dip buy, huge relative weakness, takes the low, comes back up with strength, and has huge relative strength, right? So I'm looking at a little bit of a lower time frame thing for relative strength, but that's what you want to see. Is you want coins that are relatively weak today, you're selling them. Coins that are relatively strong today, you're buying them, or at least you're in long positions on them. So those are some things to think about. I'm not going to share any charts in this video just because I want to give you a high level concept. But actually, here, let's go to the computer and I'll show you a concept just so you can see. So again, everybody, wish Nalani speedy recovery. So I have some hedge positions, and let me show you. Okay, so one of the hedge positions would be COSPA. Why? It's the setup that I described to you, where it failed at the all-time high and has fallen under. So I'm going to short that, and we're seeing the same setup for MOG, which I talked about, and then ENS. But if these don't work, I have a breakout on Tron. Why? Because it actually closed above, so I'm trading a breakout. And then also I'm trading, these aren't working great, but I'm not cutting my hedge because I'm in so many alt shorts. Longs on Bitcoin and ETH, looking at this trend line break. So this is an example of how you can do it. And as far as P&L, Bitcoin and ETH have gone against me, but you can see how at the same time Tron is in my favor. I opened today. ENS is also in my favor, so I'm long one, short one. And it's possible, but it's unlikely that I'll lose both. So that's how we do hedging. Hope you find that useful. Appreciate you. Much love. Let me know what y'all think in the comments, and peace.